It's John Crypto. Listen closely, you won't believe these figures. Silver in Shanghai skyrocketed to $120 per ounce, a jump that shocked everyone in the established press. But simultaneously, that exact same silver plunged to $74 over at COMEX, creating an unbelievable $46 difference, the biggest we've seen in many years. This isn't just a market fluctuation, it's a financial crime. The crazy part, the iShares SLV ETF alone experienced 45 million ounces flowing in this week, actual silver vanishing rapidly as regular people scrambled as if they were ants on a droplet of sugar. Yet, COMEX open interest is hovering near 220,000 contracts, a record. What does that indicate? The statistics are clearly pointing towards paper manipulation, a shaky structure held up by bets using leverage and short covering. Now let's connect the seemingly unconnected. What's in the news? Outlets like CNBC and Kitco are all shouting, "Silver is weak, market stabilizes after excitement." Sounds comforting, doesn't it? False. That storyline is a deception. They're focusing on virtual prices, overlooking the true need draining out in Shanghai, Hong Kong, and the vaults with true value. Everyday traders are panic selling, convinced $74 is a bargain, as the experts are secretly acquiring physical ounces at $120. That $46 difference isn't just a premium, it's a flashing light pointing directly at market manipulation. And here's the information the media won't mention. COMEX isn't failing because need is low. It's failing because large investment funds and precious metal dealers are overwhelming regular people with short positions. Forced liquidations are occurring now, margin requests initiated, accounts becoming worthless. Meanwhile, in Asia, purchasers are accumulating silver like the world is ending, actual metal disappearing from exchange stores, premiums rising quickly. The virtual price isn't showing reality, it's a disguise, a phony fight where regular people get caught and big players get richer. Examine the volume. COMEX reports enormous figures, yes, millions of ounces exchanged. But this is the hidden truth. Most of it isn't physically moving. It's virtual contracts being exchanged, extended, and leveraged repeatedly. However, ETF inflows and actual tangible deliveries show something different. Informed traders are quietly amassing silver in storage, accepting delivery, accumulating it independently. Regular people are simply watching charts, falling for the deception that $74 silver is cheap, foolishly walking into a carefully planned ambush. This is the key point. When regular people believe they're getting a deal, they're actually supporting the problem. They purchase COMEX virtual contracts at $74, thinking they'll profit from the upswing. And what about the banks? They observe, they manipulate, they profit. At the same time, Shanghai purchasers are spending $120 per ounce in cash, taking metal out of the market, causing a premium that shouts true shortage. The difference couldn't be more obvious. Regular people are chasing illusions on paper, while informed traders are accumulating reality in Asia. Now let me explain the open interest situation to you. 220K COMEX contracts. If you attempted to take delivery on all of it, there isn't enough silver available to fulfill it. That's systematic leverage, a biased system where the public receives margin requests and the experts silently accumulate metal. And while the established press discusses market stabilization, the reality is that the Shanghai premium is an indication of truth. Real silver isn't just scarce, it's being obtained faster than reports can even keep up with. Regular people think the crash is their chance. They participate. They purchase cheap contracts, believing they're intelligent. The experts? They're already in Asia, acquiring metal physically, understanding that the COMEX price is a made-up story, a staged presentation designed to deceive you. The $46 premium isn't unusual. It's an indicator, a flashing notification that the West is virtual, the East is real, and if you aren't paying attention, you're at a loss. And here's what surprises me most. Many individuals don't even realize that the rules have changed. Supply isn't just limited, it's flowing out of the West and accumulating in the East. COMEX might still display millions of ounces virtually, but visit a store in Shanghai, and it's emptying faster than the media dares to report. The regular person's panic, the leveraged liquidations, the artificial volume, it's a completely staged show. And as you're obsessing over the chart, the big players are celebrating all the way to physical delivery. So consider this. Do you truly think $74 is the accurate value of silver? Or are you observing the virtual market, blind to the reality occurring in Shanghai? This is just the beginning. What you haven't yet observed is how the inventory figures are decreasing. COMEX, SLV stores globally. The next segment reveals precisely where the metal is disappearing to, who's accumulating it, and why this premium isn't just a number. It's a beginning to disorder. Decreasing from COMEX storage facilities faster than anyone is willing to admit. 15 million ounces disappeared in only 2 weeks, reaching record lows, making paper contracts dangerous for regular people. At the same time, Shanghai and Hong Kong stores are draining at a speed that makes news reports seem like fiction. Actual silver vanishing into private collections, premiums shouting $46 an ounce, a flashing caution light that the media denies. Here's what's important. The leverage trap is completely active. Two 20,000 COMEX open contracts signify more silver than actually exists. That's not a market. It's a shaky paper structure designed to collapse through regular people's panic. JP Morgan, HSBC, and other precious metal dealers are controlling everything, managing the virtual game while pushing liquidation after liquidation. Every margin request, every forced selling action is a carefully planned show, intended to reduce price on the COMEX as actual metal silently flows eastward. Now connect the details on the villain's strategy. BlackRock and JP Morgan are obtaining COMEX contracts at $74, an unbelievably low price, while regular people are suffering. Federal Reserve policies have provided them unrestricted leverage, enabling powerful participants to manipulate the market as they wish. The very same Fed that professes to safeguard the system is equipping scoundrels with the means to overwhelm the populace. It's a theft camouflaged as economics, where fictional representations dictate the rate and those shouldering the true expense are oblivious to it. Here's the deception. The market plunge to $74 wasn't inadvertent. It was orchestrated. Retail panic selling, leveraged accounts depleted, ETFs impacted, all while the discerning money calmly amasses tangible ounces in Asia. The media portrays this as a typical adjustment, but anyone observant discerns the telltale signs of manipulation. The West is fictitious, the East is authenticity, and each compulsory liquidation solely amplifies the premium disparity. Past parallels resound intensely. Recall 2008 when silver surged and retail was ensnared on the unfavorable aspect of margin obligations? Or 2011, the notorious silver compression that stunned financiers as bullion firms masked deficits? Even the 2020 FTX frenzy shared comparable mechanics: paper ascendancy disguising genuine solicitation, retail trepidation, and titans discreetly procuring scarce capital. It's a blueprint, replicated and refined, manipulation in broad daylight. Here's the instinctive reality. While COMEX inventories exhibit paper figures in the millions, tangible metal is seeping away. Retail believes they're seizing opportunity. They're indeed sustaining the apparatus. SLV ETF inflows, Shanghai repository outflows, Hong Kong premiums, they all indicate a singular phenomenon, a substantial rearrangement in proprietorship of the factual silver, and the paper market is merely an apparition of veracity. Now brace yourself, the inventory narrative is just a fragment of the scenario. What unfolds subsequently isn't solely about supply, it's about who is procuring and how the geopolitical movement of silver is reconfiguring the dominion landscape. West against East is no longer symbolic, it's a monetary battle. Western banks are manipulating paper as legitimate metal departs toward Asia, engendering a deficiency the establishment either cannot or will not document. And that arranges the framework for Part 3, because it's not solely COMEX versus Shanghai any longer. It's East versus West, paper versus tangible, manipulation versus accumulation. The premium isn't simply a digit, it's an indication. Who is backing the accumulation? Which portfolios, which central institutions, which sovereign purchases are silently accumulating? And what implication does this hold for the worldwide monetary equilibrium? The statistics are exclaiming, $46 premium isn't diminishing, tangible silver isn't reverting, open interest is a delayed explosive, ETF inflows are a directory of accumulation, and the subsequent action, it's geopolitical, and it will alter the conventions of the sector indefinitely. However, it's not solely West against East. The circulation of silver is establishing a tempest that could redefine global marketplaces. Shanghai silver at 120, COMEX immobilized at $74. Arbitrage. Dismiss it. Physical scarcities render that unattainable. ETF inflows reveal Eastern amassing of tangible ounces as the West clutches paper agreements like an aid. The statistics are unequivocal. COMEX is depleting, SLV is surging, and each ounce exiting Western vaults is vanishing into Asian possession. The retail multitude gazes at graphs, presuming 74 states is an advantage, oblivious to the systemic hemorrhage of metal. Now here's the surprise. The clandestine purchases aren't hedge resources, they're central institutions, sovereign portfolios, and Chinese syndicates discreetly engulfing silver wholesale. Reports suggest Shanghai gold and silver exchange vaults are approaching capacity, yet retail solely observes the $46 premium as an oddity, not the indication of a worldwide deficit unfolding presently. Each ounce extracted from COMEX and SLV is another stride toward dual market pandemonium. Unite the fragments. China is intensifying export allocations, effectively confining silver in Asia. The premium broadens with each constraint, each consignment postponed, each mine yielding slower than anticipated. Simultaneously, the US is toying with ETF limitations and speculative silver prohibitions. Paper rates could be further tactically reduced, compelling additional retail liquidation. Every maneuver devised to regulate perception as veracity drains northeastward. And here's the sensational fluctuation. The supply chain itself is a combat zone. Mining setbacks, output obstructions, and tangible consignment decelerations from west to east render the COMEX paper game progressively inconsequential. Premiums broaden as tangible solicitation skyrockets. Agreements persist as precisely that. Agreements detached from veracity. What the West chronicles as inventory is predominantly illusion, as legitimate silver resides silently secured in vaults thousands of miles distant. Now contemplate the broader panorama. East is accumulating palpable metal. West is dabbling with paper reflections. This isn't solely concerning silver. It's a challenge to US monetary hegemony. The dollar's supremacy hinges on reliance in paper marketplaces. When the tangible veracity of silver and progressively other commodities diverges, rifts materialize. Dual marketplaces arise, premiums detonate, and monetary oversight commences displacing without a solitary headline recognizing it. Each ETF inflow, each repository withdrawal, each output postponement isn't coincidental. It's a calculated realignment of affluence and command. East assumes tangible ownership. West feigns to sustain worth on screens. Retail is cornered, susceptible to leverage, and paper agreements are their singular safeguard against pressures they cannot perceive. The premium isn't a digit, it's a signal for systemic revolution. And here's the distressing veracity. As you observe digits fluctuate on a display, the macro machinery is constructing toward a collapse. COMEX agreements cannot fulfill, SLV inflows are ascending, Asian vaults are overflowing, and the dollar-supported arrangement is exhibiting preliminary indications of rupture. Each compulsory liquidation, each postponed consignment, each intensified quota is a pace nearer to a monetary cataclysm that paper marketplaces cannot endure. This is the setting for Part 4. When the Fed imprints uncontrollably, debt tiers detonate, and bonds falter beneath systemic duress, your paper wealth transforms into faintness in a manipulated arrangement. Tangible silver and legitimate capital stand as the singular shelter as the West pursues illusions. The narrative isn't concluding, it's hurtling toward widespread disaster, and the individuals controlling actual metals are subtly determining the destiny of worldwide prosperity. All these actions paved the road for extensive devastation. When the Federal Reserve creates another trillion, bonds deteriorate, and debt tallies exceed $35 trillion, the deception crumbles. Japan's sovereign bonds are faltering, global obligations are untenable, and silver and digital currencies serve as initial alerts flashing crimson. Everyday investors confined to banks witness their deposits diminish in purchasing value, while savvy investors are discreetly accumulating limited tangible commodities, amassing silver in Shanghai strongholds and safeguarding crypto assets in offline wallets far from the system's breakdown. Here's the crucial point. The mechanism is defective. COMEX stockpiles, detached from actuality. ETFs, superficial illusions. Open interest, leverage delusions. The derivative market is an elaborate deception, and anyone clinging to it is standing on shifting sands while the East quietly gathers reality. Shanghai silver at $120, COMEX hovering at $74, premiums hitting $46. This isn't instability, it's deceit exposed and amplified by worldwide debt. Now connect the links on price forecast. Shanghai silver may persist above $100 if tangible supply proceeds draining from the West. COMEX might attempt another $60-70 plunge, a conclusive paper short squeeze intended to devastate retail investors and enable the East to amass further holdings. ETF inflows persist. SLV, physically backed ETFs, and vault liquidations all indicate the informed money accumulation pattern remains intact. The derivative markets can implode, but physical ownership reveals the authentic story. Here's the blunt reality. While financial institutions manipulate, the framework generates currency, and debt surges, your paper capital is useless if you don't take action. Every savings account is leveraged against your lack of awareness. Every partial reserve deposit is a precarious situation, and the instant assurance diminishes, retail investors are first to be harmed. So here's your imperative. Exit banks. Self-custody tangible silver and crypto assets now. Await not for the conventional media to broadcast scarcities, they shall refrain. Depend not on ETFs that can be suspended or manipulated. Assume command. Safeguard what is genuine, palpable, and impervious to manipulation. And here's the final statement. When currency is governed by falsehoods, solely the scarce and authentic shall endure. Liberty isn't conferred, it's seized. Tangible silver, cryptocurrency in offline storage, holdings external to the derivative framework that constitutes the singular protection against macro disaster. The East recognizes it, the West conceals it, and presently the decision rests with you. Observe the implosion or outlive it. This signifies the final phase. COMEX, SLV, leveraged short positions, Federal Reserve currency creation, they all converge into one axiom. Scarcity equates to influence, actuality constitutes prosperity, and the framework predicated on untruths cannot withstand the impetus of veracity. Do not idly pass this. Inform me in the commentary section. Are you accumulating silver, digital currencies, or observing the West collapse in real time? Strike the like icon should you desire me to unveil further market snares the banks prefer you not to perceive, and subscribe, activate alerts, as the approaching $46 premium or paper crash shall transpire more rapidly than anticipated.